Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for December 18, 2019. Today we're taking a look at the AUDUSD, the Australian versus the US dollar, for today's trade analysis. Something we looked at last week is the fact that this currency pair has been holding underneath the 100 period moving average for quite a long time. There's the blue line coming down from the top left hand side of the chart. There's a blue line there. That is the 200 period simple moving average here on the daily time frame. I've circled in the past several times where it has come up close to or touched the 200 period moving average and reversed. You can see all the way from the top left, touched it and reversed. Touched it here, reversed. Touched it pretty close right here in the middle and went back down. We came pretty close here, mostly underneath the black trend line, went back down, and here we are again on the far right. Don't have a circle here, but on the far right, recently we have touched that moving average once again and are falling off of it. So the trend, the facts are, when it comes close to the black trend line and the blue 200 period moving average, it finds resistance and reverses for a period of time. So if that's the case, if it's going to continue to do that, we're looking for opportunity to take a short and look for a reversal and continuation lower. It doesn't have to continue to do that. Eventually we may break that and continue to go higher, but right now we're going to trade what the market's doing, and that is it is bouncing off of that once again and going back down. You can see if we zoom in a little bit, there it is a couple of days ago, bouncing off that 200 period moving average, got right above it, and then shoot, it came right back down underneath that 200 period moving average 0.69 level. We've been moving down for the past couple of days, currently sitting underneath the yellow shaded area. Yellow zone is 0.685565. We are currently holding underneath there. Yesterday went underneath it, now holding underneath there as resistance once again. So first things first, we often talk about in the trade room, we talk about two different, or really three different trading opportunities or decisions we must make. Should we sell something? Should we buy something? Or should we just not trade it? Well, I think if it comes up to buying, if you were thinking about buying this, I don't think you want to buy it under that yellow zone. That doesn't really make a lot of sense. It's fallen off the moving average. It's back under the black trend line. It's under the yellow zone. I think buying it seems a little bit risky right now. So I'm not really buying it into resistance. So the other questions then become, should I sell it or should I just not trade it? And I don't think not trading it doesn't make any sense. I think there's an opportunity here that we could take advantage of. The fact that it's underneath the yellow zone and we have fairly limited risk. And that's a good point about this, is that we have limited risk. Let's go ahead and take it on down to the 4-hour time frame. And there's that yellow shaded area and the resistance we're finding underneath it. Look at this. Look at all these candlesticks holding underneath that yellow shaded area. So again, we have limited risk, and that's really what it's about here for me, is as long as I can get in and have limited risk, I'm okay with it. Stop loss would be above the yellow zone. That's not very far. Truthfully, let's just put it right there and measure from the bottom of the yellow zone to that red line, and we're talking about 11, 12, 13, maybe 15 pips of risk. If you were to put your stop loss there, I might put it a little bit higher, closer to the 68.75 level. The blue zone gives you a little bit extended risk, maybe 20 pips, but it's pretty tight. We're looking at the orange zone as a support target. That's not too hard to see. Over the past several hours, 4-hour period, a couple of days now, we have challenge the orange zone as support. So pretty clear target on the day would be the orange zone. Of course, anything below that would be just extended profit. And again, the risk is a break back above the yellow zone. Again, should I sell it? Should I buy it? I think buying right now becomes very limited. Think about your risk versus reward. What's the potential reward if you were to buy it right now? Well, for the past day or so, it's been zero buying it right now. So you don't want to buy it under that yellow zone. Maybe buy a break above the yellow zone becomes your opportunity, but not underneath it. Selling it, I think, in intraday wise, much better opportunity. Target the orange zone or lower. We'll see how news affects this currency pair today. We do have some news coming out for the U.S. and for Australia later today. Employment data coming out much later this evening, 7:30 p.m. So we still have some time before that. All it's going to take is a little bit of a boost for the U.S. dollar, and I think we see this back to the orange zone or lower. Think about this midterm trend here, the short midterm trend here, we're underneath that red trend line too. So that's another boost of confidence for being short rather than being long today for the Australian dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.